welcome those joining. Let me know if the sound is alright. What's up, guys? What's guys? No, Manny, there's no channel membership. There's a Patreon, though, that gets you some Discord benefits, but no YouTube channel stuff. Welcome, Michael H.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now.
All right, let's see. How's the sound, guys? Can you hear everything okay?
Amazon has appealed a record $865 million fine over the European Union's tough data protection rules. In July, regulators in Luxembourg ruled that the company violated rules through its processing of users' personal data. Amazon has denied there was any data breach. And in the U.S., it's moving to expand travel options for those who are vaccinated and clamp down on those who aren't.
Good. Maybe my American Airlines leaps will actually survive.
Vaccinated foreign travelers. The measures are the biggest changes to U.S. travel policy since the early days of the pandemic.
The only trade open in my 3K challenge right now is American Airlines. So if we start getting people off the ground again, that would please me.
It's the first day for some of the strictest coronavirus restrictions in the world. In Italy, you'll need a passport showing one of
Don't do it, Gabriel. Don't do it.
You've had at least one vaccine dose, recovered from the virus in the last 6 months, or tested negative in the last 48 hours. The pass is already required in Italy to enter museums, theaters, gyms, and indoor restaurants.
There's your passport.
And say goodbye to Alitalia. Italy's longtime flagship airline ended flights yesterday after decades of losses and numerous rushes with bankruptcy. The new state-backed flagship
I used to fly with Air Italia when I was living in Italy. It wasn't the best airline, honestly. Alright, you guys want to look at some stocks? What are we looking at today? We got top news in 5 seconds. We'll come back and look at some stocks right after this. Let's see what the next top story is.
It really isn't quite the same.
That's all this means.
It has many issues, many issues.
I agree with Guy Johnson here. Air Italia is what I used to fly with when I lived in Italy, and it was not very. It wasn't very good. It was expensive. It wasn't really good service.
Always fantastic to watch that. But it's going to be interesting to see how Alitalia slots back into a increasingly consolidated Europe.
Hey, Angel, welcome.
We all get to go across the Atlantic. So maybe that's what
You know what was good, Angel? Was Ryanair. That was the way to travel around Italy or Europe.
From the commodity angle, obviously, you take the plane. There's going to be more demand for jet fuel, so there's that positivity there. It doesn't really sound like.
All right, well, they talk about Air Italia, which I'm sure that none of us at all are invested in. Let's check out some stocks. We'll come back to Bloomberg after. So here's what I'm seeing when I look at. Let's go over to TradingView because you guys hate it when I use stock charts for some reason. But look, for a little while now, since the middle of September, we had dipped under the 50-day moving average. I don't know if you guys saw my last stream where I kept talking about, hey, look how many times we have bounced right off the 50-day moving average on SPY. Every time, without fail, no problem. We're going to do it again. And then within like 2 days, it was 1, 2, 3, 4 days, stocks completely tanked and dipped under the 50-day moving average for the first time in very briefly in March of 2021. But for the real big amount of time, I would say last time that happened was October of 2020. And here we are a year later, stocks dipping below the 50-day moving average. So it turns out I was wrong. Turns out I was wrong about bouncing off. But after this short, abbreviated amount of time, we tried to test the 50-day again. We got stuck below it, tested again, failed. And now here we are finally piercing through the 50-day moving average. And we stayed above the 200 the whole time. So the uptrend was really never broken. But if we can get above this 50-day and stay there, we've got to close above it today and not have this washout toward the end of the day like we've seen prior, like in here. If we can stay above the 50, I say we're back, the bulls are back in charge. And I'm long across the board. I am long on pretty much all of my positions. The only short positions I have right now are associated with straddles. Right now I've got the triple Q straddle. Let's check out triple Q. I hope it doesn't take away all my indicators. Yeah, we're good. Alright, so triple Q still hasn't broken up above its 50-day moving average yet, so we're not out of the woods. But during this whole time, for months now, I've been trading strangles and rolled into straddles when I needed to, and they've been looking real good. So I'm content with this, and I think we're going to start puncturing above that 50-day again and really get moving here. Let's see. What stocks you guys want to look at? Somebody at one point said Verizon leaps. Do you want to look at Verizon? Whoa. What the hell happened to Verizon? Oh, this is over like a day. Alright, over several months, it looks like Verizon's taken a big hit. Yeah, it's not looking super bullish, I'm going to be honest with you. But what is the meaning of this in here? What news sent this stock bouncing? You know, that's a lot. It's a big move for Verizon. Like a 1% like that in 2 days, or a couple of days here. That's a big move. So what is that? And if that negates this, then yeah, we could look at Verizon leaps. I think you're probably better off with shares, honestly, with Verizon, because you have they're a dividend company. I think they've got like a decent dividend. Yeah, 5%. Yeah, don't hold leaps on that, because you're going to be fighting against 5% dividend every year. Just take the shares. Buy up some shares. Use that. How's the cartography business going? I'm trying to quit. Don't tell them that, though. You want to see plug for some giggles? Alright, let's check out plug power. Now, I remember looking at this thing when it was $2, and I was like, I don't know if it's going to stay that low. I think it was for the 3K challenge. It was like down here. It was like a few dollars. And I said, there's no way that this thing is really going to take off. I mean, we've seen it. We know plug. We've seen it before. No way is this thing going to end up taking off. And here it goes up to $70 in January during that big EV rush. But what do we see technically? Alright, so the 200-day is well above the 50-day. We had a death cross over here, but that's a long time ago now. It's back in May. Honestly, it's not even that bad of a choice. With the big EV push going on right now, I think California just banned its gas-powered vehicles after 2035, something like that. There might be some future here for plug power after all. Fastly, you want to look at Fastly? We could do my portfolio too if you guys want to do that. That's also an option. Alright, so Fastly looks like it got its shit rocked. Yeah. I remember, I think it was around here in February when Fastly got like destroyed over several months. It looks like that downtrend never broke. It's finally above the 50-day moving average, but I don't know. That's not enough for me, man. I don't know if I'd be bullish on Fastly right now. In fact, all these companies that just spike and then tank, I don't know. I like to see them get down to where they were prior to the big spike. April 2020, it's not going to get that low. I don't know, man. That's a tough one. The technicals just don't look that strong. If you're buying it, it's a long-term hold, that's for sure. What's up, Wyatt? Nice $5 up in the last few days. Currently holding on a 40 by 35 credit spread in November. So you've got one expiring in November. Yeah, it's gone up lately. This is actually a really good time to probably close your put credit spread if you're up more than 50%. Alright, we'll do Alibaba real quick. So I'm actually making a Dank Trades video right now. Like I was working on it this morning. And the person who bought Alibaba right before Cinco de Mayo, so like right here, has so far lost all his money. And the Chinese crackdown on big tech, I don't think that's stopped yet. So it's definitely, wow, geez, look at Alibaba. Man, it got destroyed down to 138. That's the lowest it's been in years. Is that the lowest it's been? That's the lowest it's been since January 2019. I don't know. All right, so we've got a head and shoulders here, a skewed one. But the technicals would indicate, all right, it's gone from 319 to about, let's say 219. So the bottom should be about $100 off this. So 171 would be the bottom. It even went lower than that. Dude, tough one, man. I don't know. Alibaba is going to depend on how much the Chinese Communist Party wants to keep cracking down on it. Here was your sell signal right here, this death cross, with the 50 by 200 dropping. And it coincided with the right shoulder of the head and shoulders pattern. So I wouldn't go long here. If you're going to go long on Alibaba, take shares and hold. I would not go with calls because there's too much downward pressure. And yeah, we've come up a little bit here, but we haven't been able to puncture above this 50-day moving average. This is not a time I would go long unless you're looking way down the road. You know, you want it for 10 years from now, maybe. All right, short put on SPY. I sell short puts on SPY all the time, Elise. I sell puts on SPY all the time, so definitely do that. Don't short Alibaba. His red army will get angry. Yeah, Jack Ma already got knocked off, I think. So, all right. Well, hey, let's go. Give me some privacy real quick while I open up my portfolio, and then we'll do that. And I want to show you guys what I'm playing right now. I'll get my portfolio open, and we can take a look at what I got going on. Because I've been really excited about if you guys have been following me a little bit lately, you'll know that I'm really excited about this, the Strangle strategy that I've been using. I'm still a big advocate for it, of course. Alright, wow. Oh, my camera looks like crap against the white background, but we'll survive, right? Okay. So here's the portfolio for today. We're not quite at the highs in my non-retirement account that we were at back when Triple Q was at its all-time high, but we're getting there, outpacing the market on this recovery. And I think a lot of that has to do with the SPY trades that I've had going on, or Triple Q trades with the Strangle going on. But Apple is always going to be strong. The one I want to look at here, all right, I had the GameStop Sonic spread. Now with this one, I was selling puts about a month at a time for, you know, $900, $1,000, sometimes more like $2,000, depending on what the volatility was like at the time. This one that's about to expire here for a total loss of 2,440-ish, that is a hedge. So it's expected that it would expire worthless. The strategy I'm using, wheel, but with a put underneath it to provide you some protection in case it drops way down. That's been a strategy that's worked so far on the highly volatile stocks. Even though it looks like shit right now because I closed the total trade, it ended up being something like a $6,000 gain over a few months. So not great, but pretty good. GoPro, this is just a bet that the stock is going to drop, and it hasn't so far, so I might just close it and take the $60 loss. Lithium, if you guys don't own any lithium miners, LIT is a really good ETF to own. We have this whole green movement coming on. What is it? California just banned gasoline-powered cars. I think China is forecasted to be 100% green electricity, or not 100% green electricity, 100% electric cars by like 2040, something like that. And it's increasing every year. So, and all those vehicles need lithium. And I know there's some companies out there that are trying to make like graphite instead of lithium, something like that. Right now, there is nothing that is going to take away lithium from its leading position in powering the 5G rollout, the Internet of Things, electric cars, all that. So I've got the 100 shares of lithium here after getting assigned on a cash secured put. And now I'm selling covered calls. This one's going to expire today. I'm probably going to get pretty much to break even on it because it's a little bit in the money now, unless it melts off toward the end of the day. But I'm just going to keep spinning that wheel and taking the premium to buy more lithium. This LIT is the ticker. That's the whole ETF. Now, the only real lithium company that you can buy in the US is Albemarle. One company, Albemarle. This one gives you exposure to like the whole world of it. So really, really good one to hold. Lamb Research I just hold. I don't ask any questions. Mara. Okay, so Mara. This one, so Mara is a Bitcoin mining company. I think they've set up shop in either upstate New York, and actually not too far away from where that, what is it, GREE? It was support group and it merged. Now it's Greenwich, I think it's what it's called. Pretty close to that, where the power is cheap and the environmental regulations aren't all that high. So Mara has its huge facility there, and it's getting more miners by the week. I've been wheeling 200 shares at the $39 strike for a while. This one I think is going to get assigned. The stock is at 46, and I think my $39 covered call expiring today is going to get assigned. So in anticipation, I opened the $39 put expiring in a month. And I'm just taking about $500 a month. And I haven't bought any shares of Mara yet with that premium, but I might buy that in the future. So far I've been rolling it into other plays. But here's the big one that I want to point to. Alright, Triple Q Strangles. I've got a 376 by 350 Strangle expiring in November 19th. I don't know why I got tripped up there. But so far I've done 11 Strangles, and I have been successful on all 11 of them, despite, if you look at what Triple Q's actually done over the past few months, past like 6 months, there's been a lot of market conditions here. For the past, let's see. Yeah, and around all this time. I don't know why my candles are so thick. But, you know, the market's been doing quite a bit over the past few months here. You know, it's bounced, it's gone up, it's gone through periods of volatility, all kinds of stuff like that. And still, I was able to pull off success 11 out of 11 times by only following a couple of simple rules. So we know that Strangles. You're selling a call out of the money, you're selling a put out of the money. All right. So as long as the stock stays in between those two, you're going to be making money to theta every single day. Now I like to think of it in football terms. So you open up the trade, it is first down. You want to take profit at 50%. So you let the stock do its thing. It's going to go up and down for that month or 45 days that you have it open. Once you hit 50% gain, take it. It might take you 3 out of 5 weeks. 3 weeks to get to 50% gain. but take it every single time. When you're playing football, unless it's Madden, you're not going for the first down every single, or you're not going for a touchdown on every play. You're looking for a first down. So you're taking that 50% gain, close the trade, or reopen a new one with new strikes expiring later. So I like to use the 30 delta. It gives you a nice balance. It's a little bit more aggressive than the 16s that people usually recommend, but I've had a lot of success with it. Now, what if the stock moves too much in one direction? Like when Triple Q started dipping, I think it got down to 350 or pretty darn close to it at one point. During my last strangle, the stock in fact did break through the lower bound of my strangle. So what did I do? I took the call, which was now up like 75%, closed it, took the gain, and then rolled it to a lower strike with the same expiration date and picked up more premium. All right, that's second down. So I've still got some room left. Now I've moved my break even further to the downside. All right, but the stock continued down more. Remember, the Triple Q had gone off quite a bit recently. All right, let's see if I can pull it up. So when the stock dropped yet further down in here, to like the, is it 355, something like that, I rolled the call down again into a straddle and picked, I think it was 360 was the actual strike on it. Picked up yet more premium. And when the stock recovered just a little bit, I was able to pull gains from the call side and from the put side. All right, that's third down when you're rolling into a strangle. If it so happens that you get stuck and the stock just keeps dropping and dropping and dropping, you go to fourth down. You have a choice. You can either go to an inverted strangle, where you're actually rolling the call down below your put and pulling additional premium, but now something's always going to be in the money, so it's a little bit hard, it's a little bit tricky. Or you could just roll out in time as though you had a regular rolled short put. No problem. What I've got going on here right now, it looks pretty safe, honestly. The stock is at 368, and I've got room on either end. So I may end up closing here pretty soon. Even though I'm not at 50% gain yet, I'm at something like 30-ish. I might close this pretty soon and just roll to new strikes, because it's been going really well. And then Snap is my last big one open. I've got leaps here that I'm selling covered calls against. I'm just pulling a little bit of money each month. It's going to be about, if this expires, which it will, then we'll be talking, was it about 250 bucks after all, and I'll just roll that right into more shares of Snap. So that's the big stuff going on in my portfolio. Oh, and every week I've been selling puts on Tesla, like super deep out of the money, and it's like literally free money. They just give you $100 to sell them this pretty worthless put. In 1 week for Tesla to drop down to 650, it would have to lose, you know, what, $200 over a week, so 40 bucks a day. It's just not going to happen. So it's like free money if you have the ability to sell naked puts in them. Alright, what else we got? 0DT, another Hop collaboration. I would love to collab with Hop now. He's actually working on a project I'm going to show you guys in a video coming up. So me and Hop have actually, we've been working together lately, but not for a collaboration like this. I would like to though. There'll be more time for that in the future. Alright, so let's see what's going on in the markets here. Let's check out SPY. Oh, let's go back. You guys want to go back to Bloomberg? Let's check it out. Let's see what they're talking about these days.
Coming up, you got investors who struggle with that muted loan growth that many of the biggest
Muted
banks
loan
built into
growth.
that. Yes, trading was awesome, but what about that loans? We're going to discuss that with Art Penn.
Yeah, Daniel, I wouldn't be looking at SPY puts right now personally. I'd be looking at calls. That broker captivator is Merrill Edge. They're the ones I use for most of my stuff. Alright, so we're up in Japan, we're up in South Korea, we're up in Hong Kong. Across the world, everybody is green. UK with the FTSE 100 is up. I don't know what CAC 40 is. DAX in Germany. Everybody's up across the board, so that's real nice. So Captain Crunch, I still didn't lay on that AMD Iron Condor, believe it or not. I'm supposed to be for the next 3K challenge, but I haven't done that series in quite a while because I don't have a lot of time to do them. I'm working on the dank trades right now. I'm trying to finish it this weekend. I'm trying to finish it today, actually. Brazil's teens get vaccinated. Maybe my, so I've got shares in Brazil right now, EWZ, and these were all purchased with the Strangle strategy. So all these shares I got basically on the house, paid for with premium from other stuff. Oh, the CAC is French, thank you. But now the shares are down 15%. So looks like I've given back some of this money. Same deal with China. China's actually coming back up a little bit, so that's not too bad. But China and Brazil, these two right here. I'm working on India next. I want to pick up shares of India too, and that'll complete my around the world strategy. Fire Nance brings up a good point. He says, Strangles only on ETFs or ever consider earnings plays for individual underlyings. So I have done iron flies and iron condors for individual stocks. When the volatility is really high, it can get crushed on earnings, which helps you, you benefit from IV crush. That same IV crush doesn't really exist with the individual stocks. But in trade-off, you know that an index isn't going to move by 20% in one day. It's not going to happen. Versus you can have that happen on individual stocks. So while I have done them on individuals before, I think I did it on Snap. What else? Only a handful of them, really. I much prefer to get the consistency you get from the ETFs, especially the index ETFs. You know they're not going to move more than like 3% in a day max. So it gives you a lot of opportunity to roll around in case your trade is wrong. You don't have that same opportunity when you're talking about individual stocks. But if you're willing to roll the dice just a little bit more, or you're willing to take assignment if you get assigned on the short side, then you can do that on like an earnings event or an FDA decision on the individual stock. And if IV crush sets in, which it will, then you'll be able to benefit very, very quickly for big gains sometimes. Rich Nickards is here. Welcome. You get any have any luck so far with the focus groups? What do we got going on here? Oh, this is a commercial. The margin requirement is, so Merrill Lynch actually doesn't tell me how much margin I need when I sell the puts on Tesla, but I have something like a $400,000 allowance. So selling the one put, it doesn't even make a difference. If I wanted to sell like 15 puts, then it might. Jacob says, have you ever looked into using hedge fund strategy, triple leveraged bonds paired with triple leveraged QQQ to smooth out some risk from massive potential gains in a good market? Jacob, I've never even heard of that before. That sounds terrifying. I don't think I've ever bought bonds before. Alright, we'll watch this next segment here, and then, so I've been exorbitantly paid by sponsors this week, and I want to show you guys the sponsored content. One of them I'm actually really excited about, one of them less so. So you guys tell me in the comments, which one do you want to see first? We'll come back to the sponsored one the other sponsor much later. But do you guys want to see the less exciting of the sponsors right now, or do you want to see the really good one that I'm actually excited about? The one that I reached out to and asked them if they wanted to pay me, even though I was going to promote their stuff anyway, because I'm really excited about it. You guys let me know which one you want to see. Give them a week to respond, yeah. No, Elliot, I haven't really looked into uranium or silver at all. I looked at uranium very, very briefly. I think it's good, but it's caught so much excitement lately. I don't know if it's going to have that same uptrend that we've seen for the past couple of months. I think it might have kind of done its thing by now. If I was going to short China, how would I do it? I would buy puts on FXI. FXI is a large cap Chinese ETF. What is this guy talking about here? Loan growth and consumer debt in focus. Well, as somebody who's trying to buy a house right now, I can tell you that debt is going to increase in the near future because everybody's going to be taking on mortgages. I'll wait for a couple more votes on that. What have I been on for?
And you mentioned that the returns are more attractive, right, than they are in traditional debt markets. So what are we talking about here in terms of returns?
So debt is, what are they saying here? That rates are so low, but they're increasing, that they're expecting more people to take out loans in the near term before they increase further? Oh, I've reached my limit of live TV for today. Wow, great, thanks. We'll come back to that dude in a minute. Alright, Nikki's got a plane to catch. Alright, good luck, man. Alright, Gabriel, how'd the test go? Alright, let's, I think the votes are tallied. So let's check it out. So here is, I'm not going to tell you which one's which. You're going to have to count the votes yourself. Alright, so here is Psychedelic Camels. Now, I've been working with this group for a little while now. the marketing organization that's behind these. So this is a traditional NFT platform where they're selling at 10,000 NFTs in varying levels of rarity that you can flip and sell on open markets. Now the roadmap that they promise, all right, launching first, obviously, and then the goal here is to not only provide a market for people to flip their NFTs, but also to facilitate drops and partnerships later. So by owning an NFT, by owning one of these things, you're going to be able to participate in acting like a key to get into other organizations. So you're talking about an exchange, you're talking about eligibility for drops, and then like some art-related material. So I think given that it's psychedelic, we might be talking about things like drug distribution, we might be talking about marijuana. One way or another, this is going to act as a key in order to get you into something. So now I think a lot of people are probably already familiar with these levels of rarity and things like that, but you'll have like maybe 1 out of 5,000 camels will have this rainbow effect. 1 out of 100 will have this purple effect. So what you're trying to do if you participate in something like this is to get, now let me drop their link here. Oh, and for disclosure, this is a $2,000 sponsorship. Okay. So what you're looking to get here is one of these rare ones. If you can get a crown with laser eyes, you're looking at something that's going to be highly in demand, because this key will be very rare and it'll act differently than if you get a very common one. So let me pull up what I have in my Phantom wallet here. This is the last 2 projects. So can you guys see these? I think you can. These are on the Sol blockchain, the Solana blockchain. Now, if we look at what's in my wallet right now, these NFTs from other projects. So I've done Wealthy Whales with them before. Wealthy Whales turned out pretty good. They ended up burning anything that didn't sell quickly, so that was good. Now there's an increased level of rarity here. So this is, I think, the best one that I have. This is the Wealthy Whale number 20. There's only like 1 out of a few thousand that have this robot body. So I think I might actually have the only one that wasn't burned. So that'll be worth something as they develop their roadmap. And then you've got these are my 2 grumpy dragons. I don't think there's anything really special here. I didn't win. So these were selling for 2 each, 2 Sol each, and I don't think they're worth 2 Sol right now. They have to develop their exchange a little bit further. But really, when you're getting into something like this, and this will be the same thing for psychedelic camels, you're rolling the dice trying to get that big win. You want to get the one that is rare, because that's what's going to hold the value. And as they build out their roadmap and develop these exchanges and partnerships, you end up with a valuable key that other people are going to want to buy from you, or you can just use. Now my plan, when I have the 2 grumpy dragons, I'm going to sell one if I can. I didn't get a good shake out of that one, but if I can, I'm going to sell one and use the other as my key to the club. With the whales, I've got 5 of them, so I can do basically whatever I want. But all right, so that's it for that one. This is the project, Psychedelic Camels. I got the link dropped there. This one is probably the best of the 3 that I've done with them so far. This is a good one, but remember, it's just a JPEG NFT dice roll is what it is. They have a lot of work to do on their roadmap. So if you get into this, you've got, you really need to get that big hit. Otherwise, you're going to wind up having thrown away your soul, like I did with the Grumpy Dragons. That was a waste. The whales may be okay, but these are a dime a dozen, these type of projects. So it's up to you. If you want to throw a soul at this thing and try to quadruple your money very quickly, you can do it. It's not something I would recommend throwing a ton of money at. But if you want to get in on what could be a great project later, or you want to roll the dice on a rare one, this is an option for you. So see if there's any comments on this. Didn't see if anyone mentioned it. Okay, CAC40 is France. Yeah, that's correct. Quizzle says, adjective animals, there must be thousands of these. This should end well for speculators. Yeah, there's always... There are a lot of these, and I think they're becoming pretty common. These 10,000 things with blank animals. There's a lot of projects like this. So you've either got to trust the roadmap, or you've got to be willing to roll the dice and grab that rare one. But all right, let's all right, thank you, Psychedelic Camels. Let's move on from here. Again, for disclosure, $2,000 sponsorship. All right, let's check out. So banks came out with their earnings yesterday. Let's see if I can actually watch this, even though I ran out of live TV options for the day.
I want to welcome now Bank of America Chairman and CEO Brian Moynihan. Exclusive conversation.
Yeah, there we go.
Thank you so much.
So Bank of America had really good results.
Pretty impressive. Let me ask you about recovery.
How's that sound for you guys? Is that good?
Pre-pandemic at this stage?
Well, thank you, David. It's good to see you again, and hope everyone is safe in your family. And we're back. In other words, the activity levels and what goes on day to day is bigger than it was before the pandemic. We can talk about the economy and how that affects us, but the actual company got about half the people at work every day, and we're building that up as we go. And we got, we're doing our job for our customers and our clients, our communities, and our shareholders, as you saw today. While we're doing that, but we're still partway to getting people back at work and normalizing. That's at town hall today. With
What do you guys make of the people that are saying the reason nobody's going back to work is because they don't need to anymore? You can actually make more money not working than you do by going to work for minimum wage.
We did 1 million new credit card customers with our discipline, and that's as much as we did in 19. And so if you think about the company, we were on an organic growth drive in 16, 17, 18, and then we hit the pandemic in 19, and then we hit the pandemic in early 20. What you've seen now is, you just imagine, just like the economy, that was on an upward trajectory. It dipped, and now it's right back on that trajectory. And so are our loans a little less than they were then? Sure, but year over year, the loans are basically flat. They've grown 2 quarters in a row, and are building. And on the deposits, it's been 15% growth year over year, 12% growth, those types.
It's amazing how much money these banks actually make, and then they start nickel and diming their people, their customers, for like $30 for every little overdraft fee.
So you mentioned credit cards. It brings up, to my mind at least, consumer spending. You have a vantage into an awful lot of consumer spending in the country. Where is consumer spending in the country? What does that tell us about the economy?
Where is consumer spending?
Well, to talk about that first, to put the broad context around it, this year, Bank of America, we've already done about $2.78 trillion of money moved from consumer accounts into the economy. By charging on a debit credit card, by writing a check, by taking cash.
So people are spending their money, is what he's saying.
By moving money from P2P payments through Zelle, all those different ways they move money. And so that's grown. Over last year, it's grown by 20% plus. Well, you'd say, well, last year was still in the pandemic, but no. Last year, this quarter, we were growing at 20% plus over 19. So it's basically, if you look at it, it's grown at 20% plus over the highest levels before the pandemic, and it's growing. The month of October is up 13, 14%.
So people are spending a shit ton of money, is what he's saying. I think it helps that the economies have all reopened across all the states.
So far this year, and a record amount in the third quarter in our history, you're seeing that grow at double-digit rates. That is consistent with the
Mitch brings up a great point. He says nobody works for minimum wage anymore because gig work companies made it obsolete. Capitalism works, folks. I think that's true to an extent, but I think you've still got a pretty solid amount of the population working for minimum wage, especially if you're too poor to be a gig worker. Although I do agree that gig workers probably make a lot more money than minimum wage workers.
Well, it'll be interesting because, yes,
and Twitch streamers too. Like 14-year-olds start Twitch streaming.
From 19 to 21, skipping what happened at 20. But the thing is the question is, do people have the money to spend? And the answer is yes. If you look at checking account customers, deposit customers in our consumer business, and look in their accounts, people with like $2,000 to $5,000 average balance, which means houses probably making $75,000 a year type of numbers.
And Firenance brings up a good point too. He says if you manage your money like shit, gig working is not effective. I think people don't really know how to account for their expenses when they do this. And I remember this when I used to not collaborate with, but I used to know a drug dealer who only regarded their revenue as their gains. They didn't even regard their expenses to it. So they would buy weed for like $60 and then sell it for $80, and they'd be like, oh, I made $80. But it's not true. You made $20. I mean, of course you're not paying taxes on it, but you only made $20, and you had to drive in both locations, and you're taking on risk. What else? What other expenses? Wear and tear on your vehicle. I mean, there's all things that you have to add up when you're considering how much money you're actually making. And not only that, but what else could you have been doing instead of driving around selling weed? You could have gotten a minimum wage job for those 3 hours and made about $20. But instead you made $20 after taking on all that risk and the expenses associated with making that money. Nick, don't you have a plane to catch?
And you mentioned energy as well, to inflation. There's a lot of debate going on right now. How bad is it? How persistent is it?
Inflation, this is going to be a good point here.
Well, a few months ago, I think you and I talked about the idea of transitory inflation and what that meant. And so what that means is that if the price goes from 100 to 115, it's the expectation next. And what you've seen change pretty dramatically is the expectation from that 100 to 115 is 5% more next year. It really the actual inflation prices in the economy, which the argument by economists is those will be adjusted for and absorbed.
Fire Nance, it's on sat, man.
The expectations are that they're going to continue. That's real inflation. That's going to, and that's why the Fed has sort of indicated they're going to start to taper and start to pull out the monetary accommodation.
Stonked Up is here. Now it's a party.
4.8. Normal would be not back to the 3% level, but more 4 to 4.5.
My dog is in trouble.
Think about new claims for unemployment dropping. Think about all those things going on and worker shortages. All that will
Now, can somebody explain this to me? I'm a little bit confused about how inflation is going to harm the stock market. I understand how it harms the economy, but the stock market should presumably increase based on inflation, right? Because now a dollar is worth less, so the prices should increase in order to balance it. You know what I mean? Unless they're expecting that inflation is going to really tank the economy, then I could see it hurting stocks in the near term.
You had an increase actually in your net interest income or net interest yield.
Zé Augusto, the conspiracy theorist, says Triple Q will drop 5% on Monday. Yeah, keep dreaming, dude. This week was up due to market makers crushing puts from OPEX. Whatever that means. I don't believe that we're going to see a 5% drop on Triple Q. My dog is happy and healthy. She needs a haircut.
We make about $7.25 billion more in that 12-month period. That's because our deposits, our checking deposits, our transaction deposits for business.
Hey, Anastasios, if you're looking for some protection, pause everybody. Stonked Up did a super chat, so he gets a money gun. Love you, Stonked Up. Don't know how I'd make it without you.
We said it was there in the second quarter, albeit in the second half of the second quarter. It's really all that growth stayed with us, and we grew on top of that $16 billion from second to third quarter. That's what's caused our NII to grow, is more loans, more deposits, and positioning huge liquidity that will stay with us because we're, I think, a bit more.
So really, inflation doesn't directly affect stock prices, not in the way I'm thinking of anyway, but it can have a big effect because people are spending less money, and it would force the Fed to what? Raise the interest rate. Okay, that makes sense. Assuming they raise the interest rate.
He's going to retire at the end of the year. He's done a fantastic job for us. He's one of the things he's done, not only how he stewarded the business for the last decade plus, 12 years or more.
Yeah, hey, if somebody wants to drop the Kamikaze Cash Discord link, drop an invite to him. Or hey, Bertrand, just open up any video I have on YouTube and you'll see it in the description.
The trading business for us done a good job, and so we're very happy with the business. It's amazing how much the investment.
You know, I used to be a real skeptic about cryptocurrencies, and I would think that gold was the better investment. But I'd say in the last 2 years or so, probably since 2018, I'm starting to see that there really is value in some of these things. Stonked Up just did it again. God damn. Money gun. Stonked Up. Don't know. Oh man. Gotta reload, guys. Hold on. Thank you guys for the super chats. Appreciate you. We gotta reload our money gun. Wait. I need more ammo. Henrik, thank you. Money gun. The best birthday present I ever got was this money gun. Thank you guys for your generous contributions. I really appreciate you. Anyway, what I was saying about cryptocurrencies. So I have been using crypto for transactions in the past few months, mostly because if I deal with an international sponsor, then it's just easier. It's like $3 and they can send you $1,000 worth of Ethereum. If you were to try to do that with regular money, you're going through like Western Union or PayPal or what else? Venmo, anything like that, then you end up having to pay these exorbitant fees, and you have to pay taxes. But if you use cryptocurrency, you can transact across borders with really no trouble, and that's very intuitive. But to actually be doing it, I mean, today I transacted in Doge. Somebody paid me in Dogecoin, and then I converted it on my end into an actual cryptocurrency. Like, you can't do that with PayPal. That would have been a huge pain in the ass. So I'm starting to see the value of crypto. Anyway, the point is, instead of gold, if you want to hedge against inflation, grab some of the interest-bearing cryptos or just Bitcoin and Ethereum. That's the direction I would go with it. Bitcoin hit 60K. Let's see, can we pull up Bitcoin on let's meet our homeboy here. Can we get Bitcoin? Bitcoin to US dollar. Yep, there it is. There's your 60K. Heinrich, once again, thank you. Money gun. You guys are the best. Man, that was a good stream of the money right there. These are all $100 bills. So this is an effective use of cash. Whoops. Effective use of cash. Just got to make sure that my children don't destroy any. My dog or my daughter. All premium. Inflation hurts the middle class. Yeah, I can see it. I think that about cryptocurrency. So I mean, now that Bitcoin is back at 60,000, I mean, like we've all got. I think most people do have either a very bullish long-term view on cryptocurrency, especially Bitcoin in general, or an extremely bearish one. There's very few people that are like, yeah, it's probably worth like 10,000 maybe. Like nobody says that. It's either worth $1 million or it's worth absolutely nothing, and this is all just hype. Now, given that being the case, I mean, I tend to agree with the long-term perspective of it. I think this thing is going to be worth $100,000 in the next couple of years, and probably more beyond that. So I'm building my position as well. But in the meantime, what if you don't want to just take your money and throw it into cryptocurrencies? Maybe you want to buy equities instead because you know it's going to be more consistent, but you're still interested in Bitcoin. I have a little bit. I don't have a full Bitcoin. I think I've got like 0.1 Bitcoin, honestly. The rest is all in other cryptos. But you can sell covered calls on your Bitcoin. Like, let me put the link to it in here. It's LedgerX. I don't know if it's .com or something, so I'm just going to put LedgerX there in the chat. If you go there, you can open an account and you can trade covered calls. You could also trade cash secured puts on your Bitcoin and your Ethereum. And that's something I'm going to do for the Freeloader Challenge. I've been doing these focus groups that pay you like $200, $300 at a time. That is enough to trade a covered call on. I mean, the minimum for Ethereum is $300 because you need 0.1 ETH in order to trade to do a covered call. So with $300, it's like 2 focus groups, 1 or 2 focus groups. You can start selling covered calls a month at a time on Ethereum. And as you might expect, the premiums on that are really large. So if you do that, take the premium, buy some more coins with it right there in the app. You can build your stack. And if you want to offload, all you got to do is throw it right into your own your own Ledger wallet or paper wallet, whatever you want to do. Or if you Jack Lacener brings up a good point. He says you could just sell puts on Riot or Hut. I haven't heard of Hut before, but Mara is the one that I've been using. I think that's the direction I'd go with it if you don't want to trade on the actual coin itself. But I was selling covered calls on Bitcoin on LedgerX for a while until I got really aggressive and then just YOLO'd whatever I had made into calls, and that was a failure. I wouldn't recommend buying calls on Bitcoin either. You're just rolling dice. But something like this, I mean, we had a golden cross over here. Why are my candles so thick? I don't know why they're like huge like that. They're like a week at a time. This is a weekly chart now. 1 week. Oh, did I change this? I don't know how to change this back to the daily. So we're looking at the weekly chart. But we had a golden cross on the weekly. I don't know what I did. Golden cross on the weekly, so this is probably the start of a good uptrend here. Stonked Up says he can vouch. He is selling a shitload of calls on ETH. By the way, coin 444 price target. My price target on coin is $800. Thank you again for the super chat, my man. I really want to know, like, how much have you actually paid me so far, Stonked Up, because you throw cash at me every time I do one of these, which I appreciate tremendously. You are the reason I'm dedicated to making sure I bring YouTube content to the table. Quidzle says Bitcoin calls seem really expensive. That's right. That's why it's a great idea to sell them. I want to start doing that again with my Freeloader Challenge because I've made like $600. Or was it $700 so far? That's enough to trade 0.2 ETH and wheel that with covered calls. That's going to be my approach. When you're trying to make free money, I mean, it's really easy to do that when you're selling covered calls on really deep out of the money options on cryptocurrencies. It's freebies. I'd show you guys LedgerX, but I don't know my login information now. I haven't used it in so long. All right, let's put that on pause. Let's see what they're talking about over here on Bloomberg.
And Tom will work through year end, and then he'll stay on our Global Advisory Council and be involved in our company. And Kathy Bassant, who will move to Europe to help us over there. So
I haven't done that on Anastasia.